How's it going, guys? Welcome in, guys. Welcome in. There is sound. Just waiting on a few more people to jump in. Hopefully, everyone can see me. Sorry, I had a little bit of echo on my end. Hope you guys can hear me. Can you guys hear me? Everyone can hear me all right? If you can just give me a yes in the chat, let me know that you guys can hear me. 4 minutes and get started here in the next few minutes. Hopefully, you guys can hopefully you can hear me. Um, Let me know if you guys can see and hear me right now. Sweet, sweet. Everyone, awesome. How's everyone doing tonight? Everyone doing well? You guys have a good start here. Okay, I was up about 3K today. I gave back some gains. Both outline trading there, but then made it back with SPY today, so SPY trading me well. How'd you guys trade today though? What all did you guys trade? Curious. See my Q self. I don't get a lot of compliments in life, so when you compliment me, it makes me here. Day Danny. Sweet, awesome. You lost 200%. How do you lose more than 100%, Grant? If you put in $100, you can lose 100. Tia and Chewy. Yeah, we're going to talk about a few things tonight, guys. The main thing I want to talk about is really I want to dig into technical analysis with you guys. I really want to give you an idea of how I trade, what I where how I everything that I'm doing. But I want to give you surface level. I want to give you enough information to kind of make you dangerous and to kind of give you an idea. A lot of you guys kind of ask questions on social media. How do I trade? How do I find these setups that you're looking at? How do I actually trade these setups? I find them. I want to identify key levels, and I want to go through all of that with you guys tonight because at the end of the day, you guys are so close to becoming profitable traders that it's kind of scary, because when I think about my journey, I think back to where I was 3, 4, 5 years ago. I never thought that there'd be days where I could just wake up, make $3,000, basically what I've been doing on my green days, and go off at 12 o'clock, 1 o'clock after I hit the gym. That was when I was kind of changed my corporate desk and I checked my email, had to make sure I had PTO requests put in, had to make sure, oh, what's this? Hang on, can you hear me better now? Can you hear me a little bit better
Check the audio source.
now? Can you guys hear me now? Is it better? Yeah, I switched it from a laptop microphone to a regular microphone. Give me one second. Okay, perfect now. All right, perfect. It's waiting. Great. Okay. All right. It must have switched defaulted back. Um, Sweet. Okay. So what I was saying, guys, you guys are so close to becoming profitable traders, and I can tell you this because I can speak from experience here, right? Last year in this mentorship program, they received my 1099s that came straight from Webull, and everyone can see that I was up $463,000 and 300 and I don't know what the exact number is, 463K basically. Not a lot of traders will do that in space. Not a lot of traders will give you that 1099 to show you proof that they um, and can you guys, okay. I think it's clear. I think you guys can hear me now. Um, but you guys are closer than what you think that you are, right? A lot of times you're just one small tweak away. You have really good technical skills, you just don't know how to actually enter the trades. You know how to enter the trades and you have to do the technical analysis skills. Audio, yeah. Can you guys hear me better now? Is it better if I move the mic maybe closer? not sure why it's breaking again. Let me go to laptop audio and see if that just. Give me 1 second. Okay. Audio is not gonna be good on this because it's coming from my laptop, but I should be able to hear me. Okay, cool. It's better now. You guys can hear me okay? All right, awesome. Sorry. This is the first time we're live streaming in the studio, so bear with the technical difficulties. But hopefully you guys can hear me, and we'll get started into everything we're going to talk about tonight. To re mi fa sol. Okay, sweet. Appreciate it, KT. Thanks for the heads up. All right, guys. So what I was saying was, sometimes you guys are a lot closer to profitability than what you really think. I know trading can be very daunting. I know it can be exhausting. I know it can be depressing. I know it can, take a toll on your life, your family, on your pockets. It can take a toll on a lot of different things. I was there, right? I was at a point where I was chasing alerts. I didn't really know what to look. I didn't have a system. I didn't have a strategy, and I never really had like a signature setup that I could identify as a setup that I would take every single time. And I think when you think about prolific figures in the public eye, right? When we think about, let's say, someone like Shaquille O'Neal or someone like Kobe Bryant, right, for the LA Lakers, you think about players that had really, really strong foundations. They had, they stuck to their system and their strategy, really, right? You didn't Shaquille O'Neal trying to, shoot outside of the 3-point line. He was dominant in the paint for a reason, right? He was a big physical player in the paint. It's one of those things where as myself as a trader, like I'm not a big, let's say, commodities trader. So tomorrow you're not going to see me go trade a bunch of commodities and say that I'm a great commodities trader, right? I'm a technical analysis trader. I'm a momentum options trader. I trade momentum. I don't sell options. I buy options and I flip the premiums. And I do that every single day, day in and day out. And that's what's allowed me to make anywhere from $3,000 to $9,000 on my green days every single day that I have a green day, right? And today was no different, where we pulled in about $3,000 doing that exactly. Now, when it comes to losing the stock market, losing is inevitable, right? You're going to lose in the stock market. It's almost like becoming a professional baseball player and saying you're never going to have a strikeout. You're going to strike out. You're going to strike out a lot of times. The key is, how do we minimize the losses and make sure that we're maximizing those gains? And in order to do that, it's taking very high probability setups, because you have to remember that in the stock market, there really is no sureties, right? There's not a sure thing that every single time this pattern happens, there's going to be a breakout to the upside or to the downside, right? It just doesn't work that way. It would be like going into a casino and saying every single time a dealer draws a 5 on the blackjack table and I'm sitting with the 20, I'm going to win that hand 100% of the time. Don't know that to be a surety, and that's not something that's going to happen 100% of the time. But we could probably say with certainty that about 85 to 90% of the time, if we're sitting with the 20 on the blackjack table and 5, there's a really, really good chance that we're going to win that hand, right? So when a lot of people come to you and tell you, hey, day trading is gambling, getting in the stock market is gambling, you can tell them that no, it's not really gambling. It's a form of risk management with really no sureties in it, right? But we're playing the probabilities. The way I think about trading is really, I think about it as we're sitting at a blackjack table and we have to put down the minimum bet when we sit down at a blackjack table, right? If you go to Vegas and sit down at a blackjack, minimum bet $5. No matter what your hands are, right? Water again. I don't know why we're having audio issues. Hang on. Can you guys hear me better now? It's just on my laptop audio. I'll let you guys. Okay, cool. You guys can hear me now, maybe? It's better. Okay, cool. So what I want you guys to think about is, like, when you go into a casino, you sit down on a blackjack table and you have to put down a minimum bet of $25 per hand, but you have no idea what hand is going to be dealt to you for, right? When we think about the stock market, the way to think about stock market trading and really making money in the market is, it's almost like you get to sit down at that blackjack table and wait until your cards are dealt to you, and then you get to put your minimum bet down, right? As a stock trader, I don't have to go. Yeah, I don't have to go to, sorry, I'm making sure that you guys can hear me okay. Yeah, it's on the laptop audio now, so hopefully you guys can hear me. But I don't have to go to the table and I don't have to put down, or I don't have to come to the market and put down a minimum bet every single time I take a trade. I can wait until a setup makes sense for me, and then I can push my money into the market and try and take advantage of whatever moves are gonna happen. I don't have any audio playback in the room. So I'm not sure why we're having issues. I don't know. I don't know what's going on that end. Yeah. Hang on one second, guys. We're gonna try something out. Okay. Can you guys hear me now? This might be a little bit this might be a little easier to hear me now. Hopefully you guys can hear me. And hopefully this is better. I think we're going right into this mic now. Okay, sweet. Great. You guys can hear me. Perfect. Money. Okay. Sorry. I told you we're going to have some kinks. This is the first time in this studio specifically. So I told you we would have some kinks. I'm glad we figured it out. So great. If there are any other issues, make sure you guys drop it in the chat, in the comments, and we'll get to it. But without further ado, I want to jump into everything that I'm going to talk about tonight. And I just wanted to kind of preface it again by saying that you guys are a lot closer than what you think you are to making, crazy dollars in the market. It's just a matter of really systematizing and taking calculated probability risks in the market, right? Making sure that we're not just FOMOing into a trade because someone on social media is in that trade. If I call a trade out, if another trader calls a trade out and the trade's already gone 50% to the green side, I don't want you guys to FOMO in and chase a call and then end up being down 50%, when I'm losing 10, 20, 50, 25% on a trade. So it's really, really about, making sure that you lock in on all these things. So what I want to do tonight is give you guys an overview, because I know some of you guys are brand new when it comes to trading. So what I want to do is give you an overview of kind of what technical analysis I look at from a charting perspective. I want to talk about key levels. I want to talk about entries. I want to talk about patterns that I look at specifically. And then we'll talk a little bit about risk management. And I actually have risk management models that we use over in Alpine Trading that you guys can take and you can use. And a lot of the mentorship students have, found them to be pretty successful when they use them. Okay. So what I'm going to do is I'm going to add this chart here, and hopefully you guys can see me. I'm going to move myself over here to the right-hand side. Everyone should be able to see this chart. Now, what we're looking at is JP Morgan here. Okay. Now, if you guys have any questions, we're going to get to those in a little bit. I'm going to do this kind of section by section. I want to go through and kind of talk about stock charts in general, what I look for and what I look at. And then I'll come back, look at questions, and then we'll go into the next section. I'll come back, look at questions, etc., so on and so forth. Okay. Now, this is JP Morgan, and this is a daily chart. Now, a lot of times the thing that you guys will hear me say, and everyone in Alpine, people on Twitter, you guys hear me say this all the time, but what I'm really looking for is price consolidation, because at the end of the day, when something consolidates, it means that there is going to be a range expansion type of move that happens. Now, whether that's the upside or the downside, I really don't care. But as someone who's buying options contracts and trying to sell them, I need some type of, range expansion on those contracts and on the underlying stock itself in order to make money, right? If a stock just trades sideways, number one, we're going to get chopped up by theta decay, right? Options have an expiration date at some point, and I'm typically playing weekly options. What happens is whenever we hold a weekly option, or we hold an option of any time frame, typically, if we trade in a consolidated range for a long period of time relative to our option contract expiration date, theta is going to start to kick in, and it's going to decay the value of that premium on the option contract. What I mean by that is, let's say I buy an option contract today on a stock, and for the next 4 days, it just trades sideways and we never get any movement up or down. By Friday, that option is going to be pretty worthless because we haven't moved towards the strike price that we purchased, if that makes sense, right? If I buy, let's say on JP Morgan, I bought $220 calls today, right? Which I didn't buy, but theoretically say I did. And let's say we trade at 205 the rest of the week. By Friday, those 220 calls are probably going to be worth very, very little, if not zero, because there's a very, very slim chance that those options contracts actually go up to 220 and have any type of intrinsic value by getting into the money. Okay. So what you have to start thinking about when you're looking at stock charts and you're trying to find these names that, are going to move. Everyone asks me all the time, Strat, how do you find these names that can go 100, 200, 300, 400, 500%? All I'm looking at are names that are consolidating, and I'm looking for big moves outside of consolidation. So I'm looking for names that are consolidating and in a very tight, compact area, because eventually when they break out of that, they're going to see a massive, massive range expansion type of move that happens. Okay. Now, typically I find these on the daily time frame. We can find these on the weekly time frame as well if we're looking at maybe longer dated contracts. But for me, as a day trader, I'm typically trying to flip weekly options, and then I'm looking at 0-day options on the indexes, right? So SPY, QQQ, IWM, I'm typically trading 0-day contracts. They expire that same day. Disclaimer for anyone that is new, 0-day contracts are some of the most volatile contracts that you can trade. Yes, you can make thousands of dollars and, 100, 200, 300, even 1,000% on these contracts. However, there is very big downside risk too, right? Because the contracts expire that day. So you could see very, very big premium decays if the move goes against you. 1 5-minute candle, you could be down 30, 40, even 50% on that trade. Okay. Now, one thing I always advocate for, one of my golden rules that I always talk about in Alpine, that I talk about here on YouTube, that I talk about on Instagram, Twitter, when you get into a trade, and I know a lot of you guys don't follow this rule, and I'm telling you right now, if you follow this rule right here, if you take nothing from this live stream, take this one rule from me, because I promise you, you'll make more money than you thought possible, and you're going to see your account grow to huge numbers. But the rule is that when you get into a trade, there's only 3 outcomes that you should allow to ever happen, right? You should win big, win small, and lose small. If you can do those 3 things every single time you get into a trade, your account is going to compound and you're going to grow. A lot of you, I've gotten DMs from you guys on this last meme run where GME went crazy. A lot of you said that you lost a lot of money with GameStop. Now, a lot of people made a lot of money, and then a lot of people lost a lot of money, right? A lot of people told me that they went in really heavy because they thought that there was going to be a big move that happens. They tried to predict the market and predict the move. And what happened was they got stuck in a trade, and then they were down overnight 50, 60, 70, 80%, some people even 90% on weekly options contracts. I'm telling you right now, if you can eliminate losing big from your, arsenal when you get into a trade, your account is going to grow, and you're going to start to have those $1,000, $2,000, $3,000, $5,000, even $10,000 days if you follow those 3 rules: win big, win small, and lose small. And I can guarantee you, if I look at chat right now, which I'm not looking at the chat, but there are probably some of you who have had this happen where you've lost big and you've wiped out, a week's worth of gains, a month's worth of gains. And then you come to me and you're like, hey, I need to try and figure out how to build my account back, because that one, GameStop, it really wiped me out. Or that one trade that we took really wiped me out because I just sized in way too heavy. You have to stop thinking about sizing heavy, because what we're trying to look for is consistent base hits. It's almost like going into a baseball game and always trying to hit a home run. Eventually, hitting home runs is great. And if you hit them, that's awesome. But trying to hit a home run every single time, as a former college baseball player, I can tell you, you're going to strike out if you try and do that every single time. Instead of just trying to put the ball in play, hit the ball hard somewhere and make really good, solid contact. When it comes to trading, right, we're looking to create profitability in ourselves for our account. If we're trying to hit a home run on every single trade and we're holding for 100, 200% gains, we're gonna lose some money, right? But if we look for really, really high probability setups, we try to make really solid trades, and we do that day in and day out, every single time we take a trade, the natural effect of that is going to be that we're going to compound, and at the end of the day, we are going to make money trading. Okay. So looking at the chart here, this is kind of what I look at, right? I look at the daily time frame to start. And what I'm looking for on these daily time frames is I'm looking for consolidation patterns. And I've identified one here on JP Morgan. This is a trade that we took last week on Friday. I actually stopped out of it. It kind of stopped me out, and then it went about 230%. A lot of people in Alpine took it. A lot of people in the FU Money Club, you guys that are in there as well, I know you guys are here. You guys took that, and it paid a lot of people. But I want to show you exactly what I was looking for on this trade, how I found the trade, and kind of my thoughts around price consolidation leading to range expansion, because I think this is a really, really good example of this. And by the way, guys, this is not just information that is going to be useful to you in day trading. It's really going to help you as well, when you come to long-term stocks, when it comes to your IRAs, when it comes to your retirement accounts, your long-term stock accounts. I don't want you to think that just learning technical analysis is only beneficial for trading stocks, right? There's a reason that they don't teach you technical analysis and really the stock market in high school and in college, right? Even me as a former finance undergrad, and then I got my master's in finance, I never learned technical analysis when I was in college, right? I paid over $100,000 for a master's degree,
and I didn't learn technical analysis. I didn't learn a skill set that was really going to help me make money in the markets. I'm teaching you guys this right now. I'm going to teach you this for free right now. I'm going to show you exactly what to look for, but let that sink in for a second, right? And I always ask myself, like, why don't they teach us all of this stuff? And I, not to get too deep into conspiracy, theories, but there's a reason they don't teach us this, right? There's a reason that they don't want you to know how to participate in the market and participate in a high level to where you have the ability to make $1,000, $2,000, $3,000, whatever, right? Anything over $500 a day is really like FU money is what we would call that, right? Because where else are you going to make $500 a day in let's say an hour, right? Sometimes we make that in 2 minutes over in Alpine trading and in the FU Money Club. So there's a reason I don't want you to learn this. I'm going to teach this to you guys tonight. I'm going to show you everything that I know from a surface level, and I hope this helps you guys. So let's jump into this and let me show you guys exactly what I look for here. So price consolidation leading to range expansion. On a daily time frame chart, all of these candles represent the daily price action, right? In one day, these are what these candles represent. So I like to find price consolidation patterns on daily timeframes because what that means to me as an options trader and someone that day trades is that typically when we break these daily patterns, we see 1 or 2 days of range expansion outside of this. Now, why do I look for 1 or 2 days outside of this? Number one is because I know that the first day out of that's going to be a pretty strong move. We're going to see some really, really nice moves outside of the pattern. But once we get to day one, typically what we'll see is this is called a 3-bar up play. Now, you can Google 3-bar up plays, you can Google 2 or 3-bar up plays, but what this means is that we've gotten 3 bars upside out of consolidation. In the same way, we could have a 3-bar down play if we broke downside out of consolidation. Now, I love finding these consolidation patterns because for me as a trader, I don't like to guess. I like to take trades where there's multiple points of confluence, meaning there's multiple things that are telling me that this is a great trade to get into. I want to look for breakouts. I want to look for consolidation patterns that have the ability to break out. And as a weekly options trader and someone that's day trading, weeklies, when I find a pattern that has the potential to break, 3 bars to the upside, in 3 consecutive days, that's huge, right? Because imagine if I take a trade today, if we break out on a name, if we broke out today on a Monday and we saw 3 bars up, right, by Wednesday, the weekly options contracts have the ability to go absolutely insane. And we don't have to look too far back to look. I think it was 3 weeks ago when we took Apple contracts, when Apple hit an all-time high, 24 hours, guys, we had hit, or it was probably about 28 hours, we had hit 6,000% on weekly contracts on Apple, right? Over 60x your initial investment. So had you have put in $1,000, and you held that full position, which I don't advocate for anyone to do, but hypothetically speaking, right? If you had $1,000, let's say you had $10,000 in the original position and you swung $1,000 worth of your initial position into the next day, you were sitting on a gain of $60,000 that next day, right? Apple went absolutely ballistic. And that's what I'm looking for on a weekly, weekly options that I'm trading. I'm looking for multiple days where we can get massive, massive moves outside of consolidation patterns or big moves up over an all-time high, right? That's kind of the theme that I'm looking at right now. So on JP Morgan, what I noticed was that we had consolidation. And when I say consolidation, a lot of people are like, what does that mean? What are you looking for in consolidation? I'm looking at charts that have had big range, and the range gets tighter and tighter and tighter and tighter. And we can see here, right? We had pretty big range here, right? We had range all the way here from 189 to 204, right? And then we kind of, the range got tighter, right? We dropped down here to 195, and then we went up to 202. Then we dropped down here to 192, and we went up here to 197, right? So originally our range was here at, let's say, 189 to 205, right? 189 to 205. We had about, what is that, $15 worth of range. Then we had about $5 range. Then we had about $5 range here, right? So our range continued to get smaller and smaller and smaller. Eventually, right, when we get so tight into consolidation, that breakout is going to provide an opportunity for us to have a range expansion type of, move outside of this consolidation. And we see that happen, right? So on Thursday of last week, we saw this happen on JP Morgan, right? We can see this first day of the breakout, right? Here's the breakout, right? We see this consolidation pattern happening here. We see the one day of the breakout. As soon as this breakout happens, immediately, I'm looking at day 2 as a potential for a 2-bar up play if we have continuation and consolidation. And we can see we gapped up a little bit here, right, on JP Morgan on Friday. We dipped a little bit. This kind of dip kind of pulled me out, and then we pushed up. Now I'm going to go in and show you guys the 5-minute on this. I'm going to go in and actually show you how I would trade this intraday. But I wanted to show you from a daily time frame perspective that this is really, really, really pertinent information that you guys can use not just in your, day trading accounts, but also in your long-term accounts, right? Within 3 days, JP Morgan made a 5% move, right? So that's huge. Sometimes these price consolidation moves, they can make a 20% move in a week, right? And that's huge. If you're using your long-term account, your IRAs, your long-term stock accounts, and you see these consolidation patterns happening, you can add those stocks from an equity perspective, or you could even add options if you want to, right? And have the ability to trade that volatility to the upside or to the downside. Now, the reason I love the consolidation patterns is because it doesn't have to break upside for us to be able to make money, right? Like I told you guys, we just have to be able to break up or down. So in this instance, if we would have fallen back down here and broken downside out of consolidation, that would have worked as well for me, right? We've had consolidation patterns where we break to the downside. We don't have to just break upside. And so a lot of people always ask, are we moving up? Are we moving down? And for me, it doesn't have to be up or down, right? It doesn't have to be a certainty on either side. As soon as the pattern breaks, that's when I get in and that's when I play it. Okay. So I want to stop there first and just ask you guys if you have any questions on these patterns. The really nice thing about what I kind of do in Alpine and all of our mentorship students get, you guys get the whole entire list of my watch list sectors. So every single Sunday, I do a Sunday scan for our group. I go and I identify, charts that I'm looking at, sectors that I'm looking at. Within each sector, I kind of have one ETF and one main stock that I watch. And then I kind of watch what that stock does. And then I have a list of, let's say, 3 to 5 stocks underneath of that I look at. For example, if I'm looking at QQQ, I know that I'm going to be watching Apple, NVIDIA, Tesla, Microsoft, Google, Amazon, right? If I'm looking at XLE, maybe the energy sector, the top 3 stocks that I'm going to look for there are going to be Oxy, ExxonMobil, XOM, and Chevron Energy, which is CVX, right? If I'm looking at XLF, I'm going to look at JP Morgan. I'm going to look at Wells Fargo. I'm going to look at Bank of America. American Express was on our list today. We actually took that trade 80, I think it was 75, 80% within the first 5 minutes of the day today. So that's kind of what I'm looking at when it comes to that. So I shared that watch list with everyone over in our mentorship group. If you guys want that, make sure you send me a DM and I can send that out to you as well. So let's see if there's any questions here. Andrew says, so are you looking for pennant patterns? It doesn't necessarily have to be pennant patterns. Let me show you guys another pattern that's setting up right now that we've kind of identified over in Alpine, and we're going to be watching this. This is what I call a horizontal consolidation pattern. Now, what I mean by this is it's basically just a pattern, right, that is trading within a range. So we've got really tight range here, right? Basically on these daily candle closes, we're stuck between, let's call it 30 and 32. We've had $2 worth of range for the past 2 months, basically on INTC, right? Intel Corporation. Now, again, it doesn't have to be a pennant where we're showing wide range. We're getting tighter and tighter and tighter. It can just be a consolidation pattern where we're just trading in a range. And this is what I was telling you guys. This is where we don't want to be trading options contracts, because what INTC is doing right now is just trading sideways, and we're burning everyone's contracts basically. Let's say you had 2 months out options contracts on INTC because you thought it was going to move back up in here into like the 35 area, right? We're essentially at the same price that we were at on April 26th today on July 1st, right? April 20, let's call it April 29th. The low of that day was 30.94. Today, the low was 30.61 and the high was 31.02. So we are trading at the same exact price that we were trading at back on April 26th that we're trading at today on July 1st. So this is a consolidation pattern that eventually it's going to break. And the best way I know how to play these, right, is basically to look here. I'll right click it and then I'll just create an alert, right? I'll create an alert here. I would have to log into my Webull. I'm not logged in on this computer, but I'll create the alert. I'll right click it on Webull. I'll create the alert. It'll, and then it'll say like, okay, it'll text my phone when I'm logged in and say, okay, we're over this price, right? Same thing here. I'll create the alert. It'll text me if we fall below that price. So then I know I don't have to watch this chart and baby it every single day. I just get that alert when we break out of the consolidation pattern. Do you consider a break the close of the daily candle or which candle? Yeah, I'm looking for the break to be basically a close. If I'm looking at the daily time frame, a lot of people, why I like to look at those daily patterns is because when we break the daily patterns, that's when we typically see continuation, right? So on INTC, for example, I don't know which way this is going to break, and that's okay to me. A lot of newer traders, and myself included, I did this in the beginning. I would try and guess. I'd be like, oh man, we're going to move higher because, the S&P 500 is pushing higher. This is doing this. This is doing that. I don't really look at it that way, right? I just wait for this candle to close upside or downside. And whenever it breaks, right, that's when I'll get into it. And then I say, okay, we're probably going to see continuation on that name. In the same way here on JP Morgan, when we saw, right, on the daily time frame, we saw this break here, and we saw continuation, right? 1 day, here's the breakout, here's the 2 day, and here's the 3 day, right? So 3-bar up play outside of consolidation. I'm just looking for that daily candle close to break. And by the way, you don't have to find consolidation patterns on the daily time frame. You can look at these on the hourly time frame, daily time. I like to look at the hourly and the daily the most. Those are like kind of the biggest consolidation patterns that I like to look at. You can look at like a 15-minute consolidation pattern, but I think for me, the hourly and the daily time frame make the most sense to look at consolidation. How long do I hold my swing positions? I think it just depends until I hit my targets, right? And it depends on price action. If I'm looking for a stock to hit a certain level, I'll hold it until we get to that level, as long as we are trending. As a trend trader, I just want to make sure I'm staying within the trend. A lot of people ask, how do you know when to get out of a trade? For me, if I get into a trade because I'm thinking that we're going to trend and we have momentum, that's my thesis for getting into it. If we break the trend and break the momentum, then I'm probably going to get out of it, because there's no point of me staying in that trade, right? I got into a trade for a specific reason because something was happening. If that stops happening, then I get out of that trade. I determined the breakout level, Vanessa, based off of, I'll show you on the 5. I'll show you what it looks like on the 5-minute, but the breakout level, if I'm trying to nail it on the 5-minute, that's different than looking at it maybe on like a daily time frame for a swing trade, right? For example, like one of the biggest like breakouts that I can give you guys, and if you guys don't believe me that price consolidation, does lead in range expansion, just look at what Costco did on the weekly time frame, right? From a weekly time frame perspective, Costco traded from April 8th, of 2022 until down here when we broke out at May 12th of 2023. So basically an entire year of consolidation in this pennant pattern, right? And then we broke out and we came all the way up here, right? We came all the way up to 873 at our peak, right? Which was an 81% move. So for those of you guys that are in long-term accounts, right, just adding when we break out of these, consolidation patterns, had you have thrown $10,000 into Costco back in May of 2023, now in July of 2024, you're sitting on about an $8,100 gain, right? And you did nothing. All you did was just buy Costco in your long-term stock accounts or your long-term retirement accounts, and you just made 80% on that one trade or that one position. Those of you that have bigger accounts, right? Maybe you throw 50K into that. Maybe you throw 20K into that, and $20,000, throw 20,000 into it, and you're sitting on a $16,000 gain right now. You can sell or you can hold and wait for it to go higher. But this is consolidation, and this is kind of what I look for. So when we look for breakout levels, that's kind of what I'm looking for. Hopefully that answers the question. Do I post the same things in the FU Money Club and Alpine? Yeah, I mean, it's hard for me to post in both places. You guys have to remember, as a trader, like I actually trade. A lot of traders in our space, a lot of educators, they don't actually trade themselves. They make money off subscriptions and they make money in other ways. I trade. I give you guys my trades live. I give you guys, what I'm taking, when I'm selling. I show you guys my gains, everything that I trade. I show you guys how I do it. So it's hard for me to type out in one Discord, type out on another one. I try to give you guys as much as I can, as long as I have the ability to do it. But for me, yeah, it's hard for me to type in both, but I do type in both places. I will type, in both places. Sometimes I just miss a few trades. Like today, I wasn't able to get BA over in the FU Money Club, which is probably a good thing because BA actually didn't work out for us. Maybe I got BA in there. I didn't get the SPY calls that I took and the SPY puts that I took today. I took SPY puts and SPY calls. I didn't get those over into the FU Money Club, I don't think. It's hard for me to keep track of what I put in there and what I don't. But I trade live every single day on Voice and Alpine. Everyone gets my entries. Everyone gets my exits. Do you suggest stocks for long-term, as you mentioned? Yeah, I do have long-term suggestions, and I will give you guys those on Sunday scans. When I looking at Sunday scans, Costco was a long-term stock that I pounded the table on when we had this consolidation. We broke out a consolidation. I said, this is one that you should be adding to your long-term accounts, or one that I was actually adding to my long-term accounts. And then we saw it go 81% in a year. Let's see. Do you recommend to study, understand, and specialize in one stock like SPY, Tesla, just to mastermind those stocks? That's a good question. I have a lot of educators in the space actually recommend that. And I don't know that I actually recommend that. I don't know that I've fully agreed with them that you should only look at one stock, right? For me, the reason I don't like that is because everything I teach you guys on technical patterns can work on any single stock that you want to, right? It works on SPY, it works on Costco, it works on Tesla, it works on Apple, Microsoft, Google, any stock that we look at. So I think for me, what I'm looking at is I want you to understand what technical analysis is first. And once you understand technical analysis and how to apply it, then you can use that across any stock. And I think that's what the Sunday scans are great for every single Sunday that we do in Alpine, because I meet with you guys, I meet with the community, and I talk to you guys about what I'm seeing and what I'm looking at for, the week ahead, right? Last week, we looked at PanW, we looked at CRM. We had massive, massive moves on those last week. We talked about Netflix this past Sunday. We talked about AMD this past Sunday. The other names that we talked about INTC is one that looks like it could be breaking out. We talked about Apple as one that could break out again. So a lot of these names that we're trading during the week are names that we've already talked about on Sunday. And so for that, Osvaldo, I think I wouldn't master one stock. I would master one strategy and then apply that strategy to any stock that you're looking at. That's the key. A lot of people lose money because they try to trend trade today and they have a red day. And then tomorrow they try and become a supply and demand trader and they have a red day. And then they try and become an option seller the next day. And they try and sell credit spreads the next day. And then they try and do an iron condor the next day. The biggest thing I can remind you guys of is like, stick to one strategy. One strategy is not going to print you a green day every single day. I'm not green every day, but I'm green more than I'm not. And it's because I follow one strategy, one system every single time that I trade. Zybon, we'll get to Chewy for sure. If someone has a $2,500 account or a $5,000 account, what is a good size for a standard trade? KT asked that question. I think for me, like, I never put more than 20% in my account. You guys saw me grow that 2K account to $7,000 back in November. It was like 7,500. I think we took it like almost 400% the account. And I think for me, what it really came down to was keeping my position sizing consistent. I never went over 20% on a trade, right? So if I have a $5,000 account, I would keep my position sizing somewhere between $750 to $1,000 on every trade that I take. But I would also make sure that I'm keeping my stop loss somewhere between 20 to 25%. Remember, when it comes to risk management and growing your account, the biggest thing, it's all about risk to reward. And again, that's a term that's used a lot by a lot of different educators and gurus in our space. Most of them don't even know how to use it themselves. So what I'm going to tell you is risk to reward is very, very simple. All you're looking for is like, and what you're trying to determine is like, what am I risking to the downside to try and make to the upside? For me, I'm always looking for at least 1 to 2. I'm risking 1 unit to make 2 units. So if I'm risking a 20% loss, I want to try and pull out a 40% gain. If you do that and you have a 50% win rate, you're going to make money. So imagine what you can do if you keep that 1 to 2 risk to reward and all of a sudden you have a 75% win rate or an 80% win rate. That's when you're going to see your account really start to compound and skyrocket. And that's what we did with the 2K account back in November of 2023. I use the same strategy for 0 DTE cons, Lorenzo. Yes. I do use EMAs. We're going to talk about that in a second. I use the 9 and 21 EMAs. The market is difficult to trade, Pat, I think, if you don't really have a good strategy and system. I use options. I trade the options, right? I'll trade commons and like my long-term IRA account and my long-term equity account. That's more of like a hold kind of account. I'm not really day trading that account. But I do options. Zybon, I'll get to Chewy for sure before we're done tonight. Yep. No FOMO or chase breakouts. That's what it's all about. If you're trading 0 DT on SPY or QQQ, what timeframes are you using and where are you looking for entries and exits? We'll talk about that too. I'm looking at the 5-minute chart. Typically, I'm trading on the 5-minute chart. Yeah, this is going to be recorded, so it's on the YouTube, guys. Make sure you subscribe. If you like the stream, make sure you hit the like button. But if you subscribe to the channel, anytime I go live, which I'm going to start going live on YouTube for you guys quite frequently, you're going to be able to get, notifications when I go live. Also, the last video that I did actually outlines my entire strategy. We talk about levels. We talk about the price consolidation. We talk about the entries. And it talks about, where I made like $8,900 in a day using that exact same strategy. So if you guys look at the last YouTube video that I did, that one can probably help you out as well. All right, let's go back into JP Morgan. I want to show you guys quickly, and then we'll go into Chewy, and then maybe I'll open it up to some questions or maybe chart requests that you guys might have, and we can go over those together so you can get my thoughts right now, something that I typically only do for my mentorship students, but since we're on a live stream, I'll do that for you guys. Okay. So JP Morgan, guys, let's go into the 5-minute. I want to show you guys kind of what this looks like. Today we had a really good day on JP Morgan from a price action perspective at the open. I didn't trade it, but looks like it moved pretty well. I want to talk about the Friday play that I had. That day went kind of crazy, and unfortunately I didn't catch this move because I got stopped out, but I want to tell you guys, or at least show you guys kind of what I was looking at here. Okay, so I had basically a level right here at 270 is what I was really looking at. Okay, and I use the 9 and 21 EMA. Okay, these are the EMAs that I use. You can add them on Webull up here. If you go up here, if they're not on, right, you can just go up here. You can click on somewhere in here. Here it is, drawings. And then we can, oh, sorry, right here, indicators. You click on indicators. You can add EMA. Click it, we add it. Once it's added in there, you guys click this little gearbox up here. Right? And then you come down here. Sorry, let me go back. Yep, we go here at EMAs. And then the length, we just want to use the 9 to 21. That's what I use. And then the style, I just hit 9, 21, click that. I have colors for them. I'm done. And then that's what I use. That's what I trade with. 9 and 21 EMAs. EMAs are lagging indicators, the exponential moving averages. They're lagging indicators, but they really give you an idea if we're trending upside or we're trending downside, right? Rule of thumb is that if the 9 EMA is above the 21, we're in an upside trend. If the 9 EMA is below the 21, we're in a downside trend. Okay. And typically the rule of thumb is that if you see these EMAs really tight together, we are not trending. We're actually consolidating. We're kind of moving sideways. You'll see that when the EMA separate, you see price action moving to the upside, right? When the EMA separate to the downside, we're moving to the downside typically. Okay. So here's what I saw in JP Morgan. Here's what I was looking for. I knew that we were going to have a 2-day. I knew that it was going to be a 2-bar up play on JP Morgan, or that's what I was trading because I saw that XLF was moving really well. What I mean by that is that the financial sector on Friday looked like it was going to be moving pretty well to the upside. And I said, hey, if that happens, JP Morgan has an opportunity to get that 2-bar up play because we already had 1-bar breakout on the day before, right? So 2-bar up play, what we're looking at here is a move up here over $200.70, right? And I saw this big candle come in. I saw the volume come in. We kind of pulled down, we pushed up, and I said, okay, it's go time. This is an opening drive play, meaning this is a trade that I'm going to take right at open. JP Morgan has the opportunity to kind of push all the way up. And I think my next level was at like $200.30 or 240, somewhere up in here, right? So I was looking for this move basically to go right up in this area where we kind of hit 225, maybe was my level. I can't remember exactly. But I was looking for this to go level to level, right? Now what happened was we rejected here. We pulled down to the EMA, we pushed back up, and I said, okay, maybe we'll pop out here. We rejected again. We pulled back down. We lost the EMAs. I stopped out of it because as a trader on a 0-day contract that expires that day, I don't want to be sitting in something like a 202.5 call because, right, we're down here, we're under 200, right? We're going to be down a lot on those contracts, right? Now, what happened is we kind of held this area. We held the low of day. We pushed back up. We got over our EMAs and we pushed all the way back up to that 270 level. We got over the 270 level and then we retested that key level. And then we got a high of day, another high of day, an inside bar here, another high of day, and we went right to that level. Okay. So the moral of this story is that typically I'm pretty good with these opening drive trades. This one didn't work out. I stopped out. However, the pillars that I look for when I'm taking a trade, I want to find trend and momentum. I want to buy the pullback and I want to ride the wave. Typically that's my strategy and that's what I'm looking for. Now, the opening drive trade kind of eliminates that, buying the pullback because you just want to get into that trade and you want to ride that wave as soon as you can on the opening drive move. On this move here on JP Morgan, what I was looking at here was I tried to play that. I stopped out. I should have added back here, but I didn't because what we had was trend and momentum, right? We kind of pushed to a new high of day right here. The EMAs are separated. We have, we defended the low of day and then we just saw 1, 2, 3, 4, 5, 6 candles upside from that low of day. The very next candle was our pullback, right? We pulled right back to our $200.70 level, right? Which was right here at that rejection spot, right? It was prior resistance. Then it became support right here. And then what happened? We could ride the wave to a new high of day all the way to our target at $200.25, which is what we hit. And from here to here, those contracts went about 135%, 140%. Some people got in down here, got in a little bit early, and they went about 250%. Okay. But that's JP Morgan. That's a 5-minute trade. And this is kind of the bread and butter of what I'm looking for. As a levels guy, I'm going to talk about levels this Wednesday on our mentorship accelerator class. I do that every single first week of the month. We talk about levels. Second week of the month, we talk about technical analysis patterns that I'm looking at. Third week of the month, we talk about entries. Fourth week of the month, we talk about risk management. So this Wednesday, I'm going to be talking about levels, and you get all those prior recordings too. So if you guys are interested in that mentorship group, just send me a DM on Instagram, send me a DM on Discord, on Twitter, wherever at, and I'll send you the details for that. But levels are really the foundation of everything, right? That's why I teach those first to everyone. Once we find these levels, then it becomes very easy to find the technical setups. Then it becomes easy to find the entries. And then we ride the wave to our next level target, utilizing the risk management that I talk about all the time. Okay. So I'm going to pause there, see if you guys have any questions on JP Morgan and on that trade that went about 145%. Some people took it 250%. I personally stopped out. So as you guys can see, I'm human. I don't, not all of my trades are green. I'm going to lose money on trades. And that's one thing that I think a lot of the gurus and a lot of educators in our space won't tell you. Everything they do is green. All they do is they take winning trades, when in reality, there's a lot of traders out there that don't actually trade themselves. And so, yeah, I'm just like you guys. And again, you're not that far from getting to the level that I'm at from a consistency perspective, right? Because I was right there where you're at, and all I had to do was tweak my strategy, tweak my system a little bit. And here I am with the ability to make, in the month of June, I did $3,000 to $9,000, right? On any green day that I had. That's kind of the zones that I was in. So you guys aren't that far away. And I don't want you guys to think you are. I don't want you to get bogged down in emotions and things like that. Sometimes it's just one simple strategy tweak. Some of my mentorship students that I have, it's like, man, like I had, our first one-on-one with them. And it was like, once we had that, everything kind of changed for them. So, anything that you guys, need from that perspective, let me know. And I'll try to be the best soundboard that I can. My whole vision and goal here is to really just be the person that I kind of wish I had when I first started trading. If I had someone that would have done this with me and kind of walked me through everything, it would be, I would have, kept a lot more money in my pockets. I would have been a lot less, frustrated, a lot less upset some days and things like that. So, cool. Yeah. If you guys wouldn't mind liking the video, I'd appreciate it. I don't know how many likes we have. I can't even see. I'm on StreamYard right now, so I can't see how many likes we have. But if you guys would mind liking it and making sure you sub to the YouTube channel, I'll be posting out more content. I have a YouTube video coming out this week, actually. So hopefully you guys like that video. I'm going to try and, my goal is to push out as much good content for you guys as possible, because I want you guys to learn. This is stuff that they're not teaching you in school. I got a master's in finance and they didn't even teach me this stuff in my master's program. And I've made more from trading than my entire master's program cost me. So, that's, something to think about there. How did I find the JP Morgan trade? I was just scanning the watch list, just scanning my my watch list, and looked at XLF, saw that XLF had the potential to break out. And JP Morgan is one of the top names I look at when I look at XLF. And so I saw the consolidation pattern, and we took it. A lot of people ask, so I use flow. I do use flow sometimes. What I mean by flow is like options flow. For those of you that are new, sometimes we'll have retail traders on social media. You can use like options flow scanning tools. What it does is it kind of scans the market and it catches these big orders of people that are making like maybe bullish bets on a stock for a stock to increase in price. Maybe they're making bearish bets for a stock to decrease in price. I found that a lot of times, there's a few times where we'll get like some big bets like that on the flow orders, and there's really no technical setup pattern happening. And typically what we see there is there's like news that drops. So someone's, definitely insider trading, in my opinion, when that happens. But typically what I see when I see those flow statistics hit is that whoever that flow person is, putting hundreds of thousands or millions of dollars into those options that are betting for an upside move or betting for a downside move, they're seeing the exact same thing that I'm seeing from a technical pattern perspective. So sometimes I'll use flow and confluence with the technical pattern to actually get into a trade and really take that trade. I used to use RSI. I used to use MACDs a lot. I just don't use it anymore. I try and keep things really, really simple, guys. There's a lot of people in this space that are going to try and sell you every single indicator, every single algorithm that they have. For me, it's just simple is better for me. You can use RSI, which is relative strength index, I think, or relative something. Honestly, I don't even use it. I used to use it because once RSI hits like, let's say like 80, you can expect a pullback. Once RSI hits like 30, you can expect that there's going to be a bounce on the stock. For me, I just don't even use it anymore because I don't really need to use it. MACD, don't really use MACD either. But I know there's a lot of great traders in our space that do use it as confluence to, something else that they're seeing from a technical pattern perspective. But for me, I just don't use it. Okay. There was a request on Chewy. I want to talk about Chewy tonight with you guys. There was a technical pattern request on Chewy. They wanted to look at the technicals. So let's jump into Chewy. And let's see what we got. Okay, so this is going to be kind of a charting session with me. You guys are going to see how I chart, what I look for, and how I find things. Actually, first things first, I want to show you right here. Here's a technical pattern on Chewy of a breakdown, right? A technical breakdown pattern. Right, here's a pattern. Now, the reason I put this line here, we actually gapped up, right? We closed down here, gapped up, and then we fell down here, right? So you can see technical pattern. We get the breakdown, and then we just see multiple days of sell all the way down, right? So again, if you guys don't believe me that price consolidation leads to range expansion, we saw it happen on JP Morgan when we got the breakup, and then we got 3 days to the upside here on Chewy, right? This is back in July of 2023, right? So from June to July of 2023, we consolidated in this wedge pattern. We dropped down outside of it, and then we went all the way. You can see here, right? We dropped from here all the way down here, which was a 30% drop. And then if we keep going, right down here, we dropped, how far is that? We dropped 52% on Chewy from July to September. So in 3 months, a 52% drop. Had you have gotten puts on that, you made a lot of money on Chewy. Okay. So I just wanted to show, I saw consolidation. My eyes are trained now that when I just see consolidation, that's kind of what I look at. So I'm going to be honest with you when it comes to technical patterns here on Chewy. I don't like the fact that Roaring Kitty has been in Chewy or is in Chewy now. It's very hard to chart technical patterns when he's in there with so much retail momentum and so many wicks up and down. GameStop was the same way. For me personally, it was just very, very hard for me to chart those from a technical pattern perspective. But I'll do my best to kind of give you guys key levels and things that I'm looking at and things that you should probably consider when it comes to, looking at a name like Chewy. Okay. Now, right off the bat, when I'm looking at key levels really quickly, I'll talk about this for about 2 minutes and we'll go into the next chart. Key levels for me, I talk about this in my options 101 course that everyone gets in the mentorship program. I talk about this in my levels classes every single first Wednesday of the month that I do with the mentorship program. But I'm always looking, guys, from right to left. Now, I know that our human brain is trained to read from left to right, but when we think about trading stocks, what I want you to do is look at current price and current price shelves and volume and look and see where have we been in the past. So my eyes instantly start here. I see that we've bounced here, and I see this kind of spot here back in December of 2023, right? December of last year, we couldn't get over this spot, this $25 spot, we'll call it, right? I have 25.04. Doesn't have to be perfect, but somewhere in here, we could not get over this 25.04, 25.09 spot, right? We could probably call it like a $25 psych level. We couldn't get over it, so it was resistance. We finally got over it here on June 18th. And then what happened, right? Prior resistance became support on the daily time frame, right? So now, as long as we hold 25 on Chewy, I think we could see more upside. If we lose 25, then I'm going to be looking at downside levels, right? The downside level that I'm going to be looking at is probably somewhere right in here. We can make this level, right about there, right? Somewhere in that 21, 22 area. And you can see here, we rejected it. We got up over it. We went to our next level, came back down, gap down underneath of it. We rejected it here 1, 2, 3 times, pushed over it, pushed up to our next level, came back down, right? Prior resistance becoming support again. We launch up over 25. It becomes support. We push back up. Now 25 is support, right? So that's kind of my thoughts on Chewy. When it comes to the technical pattern perspective, we kind of broke that inside day that it had kind of been potentially setting up. And we've had really big, range and volatility. I don't know what's going to happen with Chewy. I think, if Roaring Kitty comes out and starts tweeting about Chewy in the same way that he tweeted about GME, there could be some really, really good opportunities on Chewy for some upside. I just don't know exactly what's going to happen. So from a technical pattern perspective, when I don't see anything on the daily time frame, I'll go to the hourly time frame and say, okay, let me turn off extended hours on the hourly. Is there any pattern here that makes sense on Chewy, right? And so for me, I don't really see a pattern that makes sense. Maybe there's like a little bit of an uptrend here, but we only have 2 touches of it. So for me, I know that Oswaldo, you had a question about Chewy. I just don't see a pattern that really makes sense for me on the technical side, technical pattern. I think this is going to be one that's going to be traded off momentum. So I would keep my eyes on Chewy this week. If Roaring Kitty tweets, you can add his tweet notifications on your Twitter. If you're on Twitter or X now, when he tweets, we could see really, really big moves, just like we saw on GameStop when that happened. Yeah, Chewy's turned into a meme stock. It kind of makes it hard to trade. That's kind of my thing too. I think, arguably, I think we have one of the best meme traders in the entire market. In Swaggy over in Alpine Trading, one of our pro traders. He pulled in about $200,000 on the last GameStop run. He called that back in April of this year. No one else was talking about it. He mentioned it actually back in December, talked about it in April, and then he actually put his money where his mouth was and made about $200,000 in less than a week trading GameStop. Over the lot, I think it was May into June. It was about 200,000. So I'm not the best at meme trading, but Swaggy's very, very good at that. And so a lot to learn there from him on meme trading. Yeah, Andy, we talked about Netflix in the Sunday scan yesterday. We can talk about this one now again. I think what we're seeing with Netflix, though, is potential for a push to all-time high. Great candle today. Here's the consolidation pattern that we're looking at. And the all-time high on Netflix is $700.99, I think. 7,099. So just call it 701. That's all-time high. Right. So if we get a daily candle close again, what's the breakout spot? I think Vanessa asked, how do we find the breakout spot? On the daily time frame, if we get a daily candle close over 687, there is a very, 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 very high probability that we go see all-time high on Netflix the very next day or in the coming days, because we haven't been able to close over that yet, right? 1 rejection, 2 rejections, 3 rejections, 4 rejection, 5th rejection, 6th rejection, right? So we've had 6 daily rejections up here in the past 2 weeks, and we're holding this trend line really, really well. So again, what does price consolidation lead to? You guys already know that answer, but it leads to range expansion, right? Right here, you can see the range expansion pocket here, the consolidation pocket. When we break this to the upside, we've got targets to play to the upside, and then we've got targets to play to the downside as well, because this is a key level. I just don't have it marked on my chart. Right, but here at 654, right? So from 637 area, we can look at 654 as the first target to the downside. We can look at all-time high as the next target to the upside. But again, all we have to do is go back and look at what happened to Google over the last month, what happened to Apple, what happened to Microsoft, what happened to NVIDIA. All of these stocks have made all-time highs, and we saw massive, massive price exploration, price action, meaning buyers took us to all new levels looking for that next area of resistance. So if Netflix does the same thing, I would expect that we're going to see a really, really, really big move on Netflix in the coming days. Whether it's up or down, I don't know. The good thing is it doesn't matter to us as traders if we move upside or downside, because we can buy calls for upside moves or we can buy puts for downside moves. We just have to wait for that move to happen. Okay. So Netflix, that's kind of what I'm watching, and great technical pattern. This is an A+ setup, and this is one that I would take every single time when this breaks. Yeah, I mean, I look at I'll trade it the same day. Like today on Netflix, you can see on the 5-minute, I'll show you kind of how this played out. You could have traded this today, actually, if we turn on extended hours. Right, what you could have done is traded the downside move here on Netflix as soon as we sold off. You could have traded this move here, right? Because we had a really nice move. Netflix moved down under here. We came back up. We retested that daily trend line level here. And if you would have rebought on this daily level, looking for a new low, I mean, Netflix dropped, almost $10 here, right? From 9:40 in the morning until about 10:20. So in about 40 minutes, we had a $9 move down on Netflix, and those weekly contracts actually went really, really well. Now, when it comes to holding and swinging into like today, there's no reason for me to hold puts into today, right? Why? Number one, we lost the trend. We were in a downtrend. We lost this downtrend here, right? Netflix curled back up near that level. And then we actually closed back in our consolidation zone. So for me, again, think about it from a thesis perspective. If I'm buying Netflix puts and I want to swing them into the week, I'm only going to hold those into this week if we continue to trend down and if we stay underneath of my daily consolidation pattern. If we get back over it, which is what we did, I wouldn't hold any put contracts into tomorrow. But you can trade these intraday volatility moves very, very easy. It's just you don't want to hold on to these things until the market closes at the end of the day, unless the trade is still working in the thesis that you kind of originally got into that trade with. All right, guys. Hopefully that session kind of helped you guys. Hopefully that kind of breaks down what I look for on a daily basis. And hopefully when I post ideas, whether it's in Alpine or it's in the FU Money Club or on Twitter or on Instagram, I'm hoping that you guys have a better understanding of kind of what I do and what I look for when it comes to trading. I know a lot of people that are new to this kind of look at this and they see, okay, cool, I saw you made $4,000, but how'd you make that? What were you looking at? What were you thinking of? How did you know that this was going to happen? At the end of the day, the stock market, it doesn't operate in sureties, right? We have no idea for sure what's going to happen, but we do have an idea of, what can happen based on technical patterns, based on probabilities, and based on things that we're seeing in the market. Remember, I'm not looking to predict the market. I think I've done pretty well at being able to identify pattern breaks before they happen, because I see what's happening in the market. And I think that comes with looking at the stocks. I've been live trading every single day for the past, 2 or 3 years. And I think that comes with time, but my goal here is to kind of accelerate your guys' time. And that's what the whole goal is of this accelerator mentorship program that we have over in Alpine Trading. It's really to get you on that fast track to profitability. And so if you guys are interested in that, make sure you send me a DM on Discord, Instagram, on X, wherever you want to message me at. You guys know how to find me, and I'll get you guys all the information for that. But with that said, we will be doing a lot more of these live streams. There is great YouTube content on the YouTube. I've got a whole team behind me now, so I'm hoping that you guys really, really get value out of this. Shout out to my guy Matt, who's doing everything from a video perspective behind the cameras. Also, shout out to the YouTube team. They're doing really, really good things, and we're working together to bring you guys really, really good content that I think is really going to help your journey to profitability and really help get you out of that rat race that you might be in, or kind of get you unstuck in the situation that you feel stuck in right now. So with that being said, I'm going to sign off for tonight, guys. Hope you guys had a great time on the session. Look forward to the next session with you guys. And I will see you guys all in pre-market huddle tomorrow. I think we have some really, really, really big trades coming up this week, and we'll report back on our next live stream when we do it. I'll let you guys know what we take, and as always, how much we made. See you guys. Have a good night.